Hello, everybody. Welcome to another edition of This Week in Crypto. I'll be your host alongside Dino. My name is Brian. We will be going over plenty of metrics, both on-chain and socially, over the next hour or so to talk about what's been happening in this week in crypto. And as always, I hope you're tuned in on YouTube and feel free to ask some questions as we go through these metrics here. We'll try to go through a few specific assets that you may want to look at. And of course, this week we'll be highlighting Bitcoin for obvious reasons. Bitcoin had a pretty massive week, as most know, going up just about 17% in the last 7 days, starting this past week at about 13.8 thousand and peaking at about 15.98K. So it nearly scraped that 16,000 mark. This would have been the first time that happened since early January of 2018. And as it stands now, we did hit a high that was last seen on January 7th, I believe, give or take a day or two. I haven't checked what that actual high hit, but I know that when it crossed 15,000, this was the first time since January 7th, and it's a pretty exciting time. Obviously, you would expect that euphoria is a bit up, not as much as you may expect though. It's definitely the crowd has gone bullish, but it isn't to the point where you know people are about to talk about it at the Thanksgiving dinner like they were back in 2017 and 2018, like very early 2018, like some of you may remember. But yeah, it looks like it may be getting to that point if this rally continues. As it stands now, we've kind of declined back to that 15.4 to 15.5K range, but it doesn't necessarily mean that the rally's over. As we're looking at here, this is our all Santiment projects screener, where we can look at the price returns of several different assets. Right now, we're looking at the top 100. And we see that just about 20% of them were actually down. The rest were well up, anywhere from just slightly up. You see Bitcoin plus 17%. You can see something like Strong almost doubled. Mana had a big week. We also had Celsius with a pretty big week, among some other assets here. But as I said, most of the focus is going to be on Bitcoin. Just remember that if you want to look at a screener like this, and get a tree map as well as a bar chart, you can simply go to the screener page, all Santiment projects, and this is free. You don't need a Sandbase Pro subscription. You can also look at things like filters and find out, what meets your criteria, what's had particularly high volume, what's had social volume surging, development activity, etc. And it's a very useful thing. You can go down here, also see the table for these assets. So just a quick reminder that that screener exists and it is extremely useful. All right, Bitcoin, I want to show, for starters, what the daily active address divergence looks like. I've got a model for it on Sandsheets, but as many of you may know, if you have Sandbase Pro, you can enable this adjusted price DAA divergence metric simply by going down to indicators. If you don't see indicators, you'll want to just go to account settings, and you'll see in the account settings that there's a button to enable beta metrics. Right now, adjusted price DAA is a beta metric because it's still being worked on and perfected, but it more or less is pretty reliable at this point, give or take a few percentage points. And we can clearly see that there's a lot of red basically since mid to late October. So we're going on about 2 to 3 weeks now of very red bars that indicate that compared to where the price is, historically, daily active addresses are not keeping up. And we use about 4 years worth of data. So this is going back to about November 2016 to tell us where daily active addresses should be based on the course of history through those 1400-ish days. And it's a very accurate way to really understand whether we're overheated or underheated based on the amount of unique addresses transacting on the network. As you can see, This current day is pretty far down. Now, obviously, most of you know by now to keep the current day with a bit of a grain of salt, because it doesn't tend to go up proportionally until the day is done. So oftentimes it'll look more red than it actually is. Either way, it doesn't seem to be an extremely bullish day by any means, just like the past 2 to 3 weeks here. You can see we had a particularly bearish day right back here. This was 3 days back on the 3rd, and my Windows is loading. Hopefully that goes away. Okay, good. But you can see, like, especially right here around the 25th, that's when it really started to go extremely bearish. Anything, if you look over here at these numbers, anything about negative 30-ish to negative 40, that's about the cutoff for when it gets to be really bearish according to this model. And obviously the price has ignored it. We were back at about 13,000 when that started. And obviously we pushed all the way up to almost 16,000 before it just started to retrace. But based on what I'm seeing here, we still need to see more daily active addresses occurring on the network, or this price is going to come down eventually. I do believe that FOMO has had a lot to do with this run. Dino will get into some other reasonings, including the Ethereum 2.0 announcement and general other thing, PayPal, things of that nature. So we'll talk about that more later in the call, but I'm trying to just go over the pure metrics right now and talk about, where we stand objectively according to our on-chain and social metrics. And right now, still looking bearish. We had our best daily active address day. You'll notice this is still red, but this actually was a year high, and I'm going to illustrate it up here to show just how high our price has gone. To have a year-long high but have it still show up as a slightly bearish mark is pretty crazy. It means that daily active addresses just over the past few months especially have been extremely low. And I'm going to highlight right here, November 4th, you see 1.17 million. We can go back a year. In fact, it's beyond a year. I take it back. It actually went, let me see, about 2018, 2017. Sorry guys, the button's being a little weird. Yeah, so the last time it was this high was the 10th, I believe. Yeah, on the 10th of 2018, January 10th, it hit 1.22 million daily active addresses. That was the last time a single day exceeded what we saw on the 4th. And that's pretty significant. It meant that for whatever, whether it was FOMO related or whether there were other fundamental reasons, this was able, this bar was an indication that price was actually being justified, at least for that single day. But if we zoom in, right, and we look at it in isolation, it's still way above what the rest of the days around it have been. Like if we go to 6 months here, the day before it was extremely low and we had 778.6K, and then 1.03, and then it eventually got to 1.17 million. But looking at this, I think that day was kind of in isolation, and the next day was also good at 1.07. We're gonna have to see how the next week goes here. And like I said, if you're a Sandbase Pro member, I highly recommend highlighting this DAA divergence, especially the adjusted one, because it's going to show you, based on the last 4 years of history, exactly where we stand with the expected amount of daily active addresses and where it should be based on price. So because we pushed up so high, we should have even more than these highs of 1.17. So very interesting there. I'm now going to show what the MVRV looks like. So for those of you who don't know, MVRV is a measurement of what the average trader's returns are at any given time based on when they put in their initial investment. Now, this includes things along the way like FOMO, FUD, all sorts of various trades that may be caused by market fluctuations or market events. So it isn't just purely like what the Bitcoin price return was over the last 90 days. This is our tracked average trader return over those 90 days. So sometimes it might be better, very oftentimes, more so, it tends to be a little worse than what the normal hodler percentage would be if they just bought 90 days ago and left it alone, right? So what we're looking at now is 6 different time frames. I think they're the most important time frames for any short to semi-long trader, unless you're looking at something like holding for the next 2 years and not touching anything. These are the 6 you'd want to look at. And what we're seeing right now is we're at the highest point combined between these 6 that we've ever been over at least the last 6 months. As I was looking, we had a few big highs over here, but you'll notice like the short-term ones back in July were really high, but you still had like the year-long one and the 90-day one, not that high. Right now, all of these MVRVs, no matter what time they started over the course of the last year, are extremely high, to the point where a model, which I'm going to try to show later, it isn't loading at the moment, but I will get that up during the course of the call after Dino takes over. I'll make sure it's up. But our model is indicating that we're in an effective danger zone right now. And when I say danger zone, it means that these MVRVs are at a point above their 90th percentile historically for each respective time. So for example, if you look over the top left, you can see that the 1-day MVRV is at 4.6. Usually anything above about 2.8 to 2.9% is considered a danger zone, because historically that's an extremely high price return for the average trader over the course of 1 day. We can look at something like the 365-day, 48.4%. There are obviously over the course of a year many returns that are well over that for the average trader, but this is still toward the high range for MVRV for that period of time. And that's considered a danger zone as well. You can look back historically and see that over the last 6 months, we haven't approached that percentage until now. So 1-year traders are doing extremely well. You can also see that 180, 90, 30, and 7, these are all really high percentages for this amount of time that goes by during their investment. So that's why I want to forewarn people that if you're going to continue to hold, or you're considering opening a long here, just know that you're doing so on the tail end of a lot of average traders over this period of time already getting really, really high returns compared to the average time in the markets.
Yeah, Brian, do you want to show us the, like, from the start of January, from January 1st, 2019 upwards? So basically the last 2 years, just so people can basically see that we are, yeah, that's a bit noisy. Maybe just leave 30 days and 365 days MVRV for Bitcoin. That will do the trick. Basically, the thing that I want to show is that we are slowly but surely approaching the highs that we've seen during the bull cycle in 2019, but we're not there yet. So this is something I think that we've mentioned last week as well, is that basically what MVRV is telling us at the moment is that pretty much all of Bitcoin holder groups are in solid profit, right? The question now is, how confident are they about the midterm potential of this particular cryptocurrency? If they are, we could see this go a bit higher if we are indeed in sort of a midpoint at an actual bull cycle for Bitcoin and the crypto market in general. If that is the case, and if history repeats itself like we've seen it in 2019, we could go even higher, a little bit higher than we are now in terms of their average profits before they start taking profits. So on the other hand, if you know, it seems like Biden is almost, you know, it's not official yet, but almost certainly has won. And if there have been some, you know, concerns that if Biden wins, then you know, the stock market is going to dump. And you know, if it somehow happens that once again, like it happened in during the Black Thursday dump, that Bitcoin was super correlated with at the S&P 500 index. If we see some sort of volatility in Bitcoin in the next couple of days and people start getting kind of restless and a bit anxious about its short and midterm potential, they might start taking profit. So it's kind of, we're still sort of in a, you know, it's crazy to say, but I think we're still kind of in the middle road. We could go higher, or we could see people start taking profits at this particular moment in time. As ridiculous as it sounds, because the 365-day MVRV, basically the average ROI of long-term Bitcoin holders is the highest it's been the entire year. But if we look at a sort of, you know, now we're looking at like bull cycle trends, basically. If we're looking at it from that perspective, we could see them hodl a little bit more and then start to take profits. So, you know, even though we're super high, I don't know if I would necessarily myself enter into a position here. But I, at the same time, wouldn't be completely surprised if I saw Bitcoin, you know, jump a little bit higher even before we see a correction, which is, you know, imminent at some point, right? So just my 2 cents here.
Yeah, I appreciate that perspective. You know, it doesn't happen often, but I think that I disagree a little with what Dino's saying. I think that absolutely you can, you know, we can get to this 365-day MVRV here of 105% that it peaked at, but this is not very typical. Like, I know it happened in late 2017 as well. Obviously to an even more extreme point of 156% before dropping down. But generally, I mean, the standard, right, is 0%. This is what MVRVs tend to average around. And if you're above 0%, you're already in slightly overheated territory, depending on just how above 0% you are. And these percentages are telling me that we're still well above the norm. And obviously we can compare to the extremes. And like Dino said, there is merit to comparing versus strictly bull cycles, which we saw in June 2019 and December of 2017. But all things considered, we can't just expect that every time prices are surging like they have been over the last few weeks, that means we're going to get a repeat of something that we see every 1.5 years, right? So it's tough to predict whether MVRV is going to continue going higher. Obviously, the euphoria and the FOMO can push things up, but you know, you'd rather see an entry position here, right, at negative 52% for the 365-day MVRV than even 1% right? So we're at plus 47. We can get up to here, or we can get up to here. Just know that that's rare, and that only happens once every 1.5 years.
We're probably not ever going to get to the same sort of MVRV levels that we got in 2017. The thing with MVRVs as an indicator is that it tends to flatten out over time as the market matures. So, you know, as we see less and less sort of volatility on a monthly basis in the crypto market and on a yearly basis, holders are less akin to, you know, hold their bags until they see like 150, 170% profits. That's just way too much. You know, today in 2020, if it was like the ICO craze like it was in 2017, that's a different story. So over time, as the market matures, as the sort of risk returns become a little bit less than expected in the crypto market, the MVRV ratio is also going to slow down a bit. So yeah, it's I definitely agree. I mean, it's very high. I'm just saying, you know, if you're looking at it from a bull cycle perspective, who knows? It's we'll have to wait and see, I think.
I'm certainly with you. There is room for it to run a little more, but you know, all things considered, it is a scarier time than average. That's where we'll leave it. Okay, so what we're looking at now is the weighted social sentiment of Bitcoin. What this is essentially measuring is the amount of volume compared to the norm for Bitcoin, and then also multiplying it by the ratio between positive and negative sentiment. So generally, you get the highest bars here when Bitcoin is being talked about a lot, and it's being talked about in a positive fashion. And there's a lot of words tracked by our algorithm, like buying or bought or longing or Lambo, you know, things like that. But what we've seen is probably not what you would expect as we had this giant run. I think there was quite a bit of disbelief here, even myself included. I was not expecting things to go up. For those of you who tuned into our last couple of weeks of This Week in Crypto, we've been saying we're overinflated for quite a while, right? And the market's kind of agreeing, or at least they certainly didn't expect to run up to 16,000. And we can look at the last, we'll start with the largest bar here, of course, on November 4th. This is when we very, very briefly hit a local top, as you'll often see with these big spikes, right? Right after the big spikes happen, there's a mild drop, or at least a flattening out like we saw here. Make it a little bigger here. What we saw during this climb was actually a lot of negativity. A lot of people saying that Bitcoin can't go up as high as it already had been. And once we got to about this point at about 14.3, 14.4, that's when we turned positive. But it didn't matter at that point. We were basically surging all the way up over the last couple of days. We finally got negative around here. Interestingly, we had a local top finally at 15.98 or so, like I said, and we weren't really that extremely positive by any means. And that tells me that the crowd is still not as euphoric as you may imagine. They certainly are euphoric, and I'll show some other social metrics to back that up, but they aren't at a point where everyone is talking about things going back to 20K like it was about to hit in January before it dropped down precipitously. But we are seeing that we had the largest weighted social sentiment spike back on the 4th that we saw in about a year. It's pretty noisy, but I'll just briefly show it. You can barely make it out because there's so many metrics here, and we're on a 2-hour interval right now, so keep that in mind. But very, very dim here. You can see that there was a November 29th one that occurred right at a local top, and this doesn't look like much compared to this, but this was actually still a pretty good price run of about 15%. Back on the 24th, when it was at about 6,900, it got up to 7,700 when this massive spike occurred. And that was a 5-day span of a pretty similar time, or a pretty similar price jump that we saw over the past week, about 14, 15%. And then it declined again. So keep in mind that when these really large bars happen, it'll often coincide with a drop. Obviously, this last one did not have that occur. But if we were to look at it on more of like a 24-hour perspective, you'll see over time that the large bars will coincide with the local tops, and the bottoms, right, like this one, occurred right when it was at 12.8, and then it started to take off. So keep this one in mind. Weighted social sentiment is a really cool metric, and you can even break it down to various platforms, not just total, but you can look at Twitter, Reddit, etc. I'm also going to show you guys social volume.
If you also want to do weighted social sentiment for Twitter specifically, because our data, our social sentiment data has been trained on Twitter's data in particular. So usually when we're looking at social sentiment, it's a good idea to look at Twitter specifically, right? Because that's where the most sort of reliable results are going to be. So what you're seeing is, yeah, we have seen the, sort of a period of hype recently as Bitcoin has crossed the 15K mark. But since then, we were already, moving back into this ambivalent territory. And that's, I'm just talking to James here in chat. That's what I'm seeing. I think if Max is on the call, he can maybe attest to this as well. A lot of people today, a lot of sort of quote unquote influencers, YouTubers, they are expressing concern about Bitcoin's current state and this 12.6%. What did you say, Max? Sorry?
Max says that he's on the call.
Oh, okay. Yeah. So you can give your perspective as well, but basically what I'm seeing on Twitter and crypto social media in general, there's a lot of sort of FUD at the moment among influencers as well, which, seems to be reflected on this data. I'm just saying to James, oftentimes in the past we have seen it can be lucrative to kind of counter trade the crowd. So, this is something that although MVRV and a few other metrics are kind of pointing to a pretty dangerous zone for Bitcoin, the fact that the crowd is still at a bit of a disbelief, it could mean that we're not at the top just yet. What do you think, Max?
Yes, well, they're not fuzzing. Just you see from influencers say, well, good to take profits, good to take. It's they will say buy the dip, buy the dip. Ultimate top. We know it from experience. You will hardly find any suggestions to exit the market. And if you do so, if, for instance, I publish myself a good time to leave the market, there will be reactions are stupid or what. So this is a definition of ultimate top. We're not there. If I say now at the profit, say, yes, it's smart move. Yeah, and there will not be reaction like this. But markets are a complex thing, and it can easily move back to 12,000 and then again back to 2,000. Yeah, just don't treat it too straightforward. There, yeah. But what you said is right. Yeah, we at least yesterday. Yeah, see if the messages will change today. Yeah. Yesterday it was definitely, oh cool, I took profits, you should do too. Yeah. Only Mike Novogratz said he will do tattoo, but okay, this is a different story.
Yeah. We are, however, seeing definitely a spike in social volume. So Brian, if you want to put that here as well, this is a bit concerning, but at the moment, yes, we are very high in terms of average Bitcoin mentions, as you would expect, right, given the price action. But once again, I would be cautious of calling it a top. The spike in social volume itself isn't necessarily a sign of a looming top. What you want to keep an eye on is a kind of a forming divergence between the price and the social volume. So if the social volume or the amount of Bitcoin related mentions start dropping over the weekend and into next week, right? And you can kind of look, if you zoom out to, let's say, the last 6 months, you'll kind of see that as well happening for Bitcoin in the past. Once we see the sort of Bitcoin related hype start to drop, this is the point at which usually the price starts correcting itself. So for example, see here in, what was that, like July, I think? Yeah. So it was like at the start of that rally in July, there was a whole lot of social volume for specifically for Bitcoin. So a lot of people were talking about BTC breaking the 10K mark, huge psychological resistance level and so forth. And we didn't correct. Sure, there was a bit of a consolidation period, which I assume will happen for BTC as well. But this sort of high level of social engagement with the Bitcoin, market has kept itself for about a couple of weeks, I think, even into early August. So it wasn't until we really started seeing a decided, declining crowd interest into the rally that we saw Bitcoin start to correct itself as well. So I think for me, my advice would be keep an eye on Bitcoin social volume and general social metrics over the next couple of days, because at the moment there's still quite a bit of hype and quite a bit of talk and chatter about Bitcoin, which could be dangerous. But if it prolongs itself for a bit more, it might not be the top yet.
Yeah, I completely agree with you, Dino. I think that we aren't quite at the point where it's excessive like it was back in late July. But I have this 30-day trend line up, which many of you may not know that you actually can use for any metric. You can basically open the settings here and go to indicators, and you can enable any of these. So we're looking at the 30-day just to get rid of a little bit of the noise. You can see that the 30-day is climbing a little bit, but it's nothing extreme like it was back in late July, early August when it really peaked. And until it does, that means that we aren't seeing absolutely excessive FOMO that you would want to take profit into, because it's a sign that the crowd is overly elated or euphoric about Bitcoin. So it's not extreme, but it's just something to keep in mind. And, you know, Maxim, while he was just talking, he reminded me that he put out a great report about 6 to 8 months ago about the aligning of social volume, and daily active addresses. And when they all spike in unison, it can be a sign of a rally forming. And I want to really briefly compare with you guys what these spikes here in just the past 24 hours meant in terms of lining up between all three of those key metrics. So bear with me while I put those on. I'm going to see if it's actually seeable on the same graph. Otherwise, I'll separate them.
Sure. In the meantime, I'll answer a question from Chad. Benjamin is asking, is there any data for new clients on exchanges, basically for signs of retail people coming back? So Benjamin, for Bitcoin specifically, we are currently in the process of remaking our exchange metrics. So they should be up, you know, I don't have the direct ETA, we'll have to ask our devs. But at the moment, I wouldn't rely on exchange data in particular. We can look at Ethereum's exchange data, which is up to date. To see any sort of, any sort of movement in terms of the increased sell pressure, buy pressure, things like that. As Brian will maybe show or I can show you a bit later, there has been a little bit of an uptick in exchange inflows for Ethereum, pointing to the fact that, people are starting to move their coins to exchanges, presumably maybe to start taking some profit. And one other way that we can kind of show if a retail is coming in is if there is a spike in exchange-related inflows of stable coins. So we can do that in a bit as well. Look at, for example, data for Tether, USDC, TUSD, BUSD, these large stable coins that are often used for purchasing. For kind of people are staying in stable coins while the market is shaky, and then they move back into specific alts or Bitcoin when they're confident. So if we see spikes in exchange inflow for these particular coins, that can point to the fact that people are moving their stable coins to exchanges, presumably to exchange them for, more volatile cryptocurrencies, Bitcoin and altcoins and stuff like that. So we'll look at that in a bit to see if there's really any sort of signs of retail buy pressure, at least on chain. But before that, Brian, I think you've got your screen set up. So go ahead.
Absolutely. So what we're looking at right now, as promised, is volume here in gray, daily active addresses in orange, and social volume in blue. Now, if we were to look at just social volume in isolation, it's going to look like we're seeing likely local tops, because as many of us have learned, when social volume spikes to an excessive amount, while the price is rising, it usually leads to a correction. However, I mentioned Maxim's analysis from earlier in the year about what happens when DAA volume and social volume all align with rising outliers in their data compared to previous days or weeks. And we see that essentially happened, not perfectly by any means, but we saw that volume had a huge day here on the 29th, and it had pretty good days the last couple of days compared to the norm back here, right? So social or regular volume, that is up. And then you look at what happened on the 4th and the 5th for daily active addresses and social volume. And you can see, especially on the 5th, yesterday, we had a spike in volume, DAA, and social volume. The last time that happened looks like the 21st, right when the rally was starting, right? Because we were at 12.2K, and by the end of the day, we were at 12.8 or 12.7-ish, and the rally mostly just continued upwards because it was getting higher than usual trading volume, a little bit higher than average daily active addresses, but if you look at just the week in totality, you can see that it was already getting pretty high, and then a huge spike in social volume. And when this happens, it tends to be validation of a sign that at least a short to midterm bull cycle is underway, right? So when we look at those all together, good things tend to happen, and vice versa when they're all low at the same time, like right here, for example, on the 20th. Notice how social volume, and DAA, which isn't even showing because it's being overlapped by these two. None of them were high at all. And sure enough, the price dropped, right? Last time that happened before that, August 29th, a few days later, huge drop. So definitely a something to be said about how these three metrics coincide with each other. And if you're savvy enough to really spot those extra low days or extra high days in tandem with each other, you can see clear validations of where the price is about to move, and it's a great leading indicator. Okay, I think we should transition over to you, Dino, and talk a little bit about reasonings for this rally and some other things that you've been seeing yourself.
Okay, sure. Let me share my screen. And in the meantime, guys, any sort of questions for specific coins that you would like us to look into after I talk a little bit more about Bitcoin and Ethereum, just let us know and we'll do it in chat. I've already seen Ren and Stake, and I think I've also seen some questions about Uni, so we can cover those in a minute. Before that, let's briefly answer Benjamin's question. So if I were to try to look for clues about retail money moving back into the crypto market, I would look into exchange metrics for stablecoins, because like I mentioned 5 minutes ago, when you see a lot of different, on a daily basis, inflow of USDC, USDT, TUSD, even DAI to an extent, inflow of these coins into exchanges, you could assume that they are being moved there for a particular reason, which is likely to convert them into more more volatile cryptocurrencies. So I am going to zoom out of this particular spike that happened maybe 15 days ago. This was case. Reason for this was like arbitrage, nothing specific to any coin's market action. I've already plotted the price of Bitcoin, so you can kind of see how it evolves over time. So let's start with Tether, the biggest stablecoin, and let's look at yeah, this is the 15-minute interval for the past 2 weeks. So definitely can see a little bit of a spike over the last couple of days, especially here during the day yesterday as Bitcoin was kind of pushing up to the 15K range. You can clearly see a sort of an increase in the amount of Tether being moved to exchanges, likely to purchase BTC or even else, because you can see a lot of them are currently up by quite a large margin over the last 24 hours. Similar spike has happened today as well. Specifically at this drop off here. So as Bitcoin kind of went below, or it almost touched 16K, dropped back here to 15.5. We saw another sort of influx of buy pressure, likely coinciding with this uptick as well. So yes, as far as USDT is concerned, we have seen a slight uptick in the retail sort of sector buy pressure. I wouldn't necessarily, well, this isn't necessarily retail, it could also be whales. But I would like to see this be a bit more pronounced and happen for a while longer before I were to make any sort of conclusions about it. Let's look at the second biggest stablecoin, USDC, and a few things that are quite interesting with USDC. So once again, yesterday during the day, we have seen several sort of large upticks in USDC's exchange inflow as Bitcoin was pumping to 15K. But if you look at recent spikes in USDC's exchange inflow, compared to the price of Bitcoin, you can very clearly see sort of coinciding or sort of inverse correlation between Bitcoin's bottom and spikes in exchange inflow, people looking to buy the dip. Bitcoin starts bottoming, once again looking to buy the dip. Bitcoin here starts bottoming, we see a big spike in USDC's exchange inflow as people were likely moving to buy the dip as well. So something that I like to keep in mind or keep an eye out very often is looking at USDC and USDT's exchange inflows and how they correlate with Bitcoin's price action. So yes, we have once again seen here quite a big sort of spike in the USDC's exchange inflow yesterday, pointing to the fact that there was an increased buy pressure. It has normalized today, so keep an eye on it. Once again, there was a sort of mini spike during this dip here. But since then, I think if we kind of move back to these levels, it might be an indicator of buy pressure sort of becoming exhausted. We can also look at briefly at, let's say, BUSD. Although, Binance is a stable coin. Okay, once again, a similar issue here, or similar pattern. Although BUSD isn't really the market mover like USDT and USDC to an extent, you can definitely see a spike in its exchange inflow yesterday. So it's nice to something nice to keep an eye on. Once again, normalization over the last 24 hours. So keep an eye on this lack of buy pressure if it continues, right? Okay. So recently, or briefly, I also wanted to talk about Ethereum because there was massive news. Yeah, what was it? 2 days ago? Yeah. So for anyone who missed it, 2 days ago, Ethereum's ETH 2.0 deposit contract went live. So what that basically means is that now people can start depositing or staking their Ethereum to become validators on Ethereum 2.0 mainnet. Now, I don't want to go too much into details here, but I will say that this is very, very early on in Ethereum 2.0's life cycle. The actual mainnet with all of their main characteristics, including sharding, is not supposed to, or it's not estimated to go live for at least 2 more years. So if you are interested in maybe putting some ETH into and staking ETH into the ETH 2.0 beacon chain, it will be probably a while until you see a return on investment. So this is something to keep in mind. Nevertheless, however, it definitely seems to have been a case of buy the rumor, sell the news. So essentially, this is the point in time where we saw the Vitalik tweet about Ethereum 2.0 deposit contract going live. Immediate uptick to about 400 for Ethereum, and since then, kind of just tracking Bitcoin's price performance as well. So this is something that I think, and a few other people in the company do agree that we might see a pretty good month for Ethereum if this sort of buy the rumor, sell the news sort of mood continues. And there's been a lot of, so if you go to Ethereum's launchpad, let's see, launchpad.ethereum.org. So here you can track the amount of Ethereum that has been staked in the deposit contract over time. So what this means for those unaware is that there needs to be 524,000 Ethereum staked in order for the Ethereum 2.0 phase 0 to launch, or the beacon chain to become quote unquote activated. So the plan at the moment is for the 524,000 Ethereum to be staked a week before December 1st. So basically in a couple of weeks, right? We need to go from here, basically 40K to 524K in order for Ethereum 2.0 phase 0 to be launched on time. So as we see, and if we see this sort of line start to get filled in the next couple of weeks, I think that sort of FOMO is going to, or can, impact the price of Ethereum positively. Obviously, it might be too early to see, but yeah, I mean, just the fact that the deposit contract launch has pumped the coin by like 15% or something, to me, it's a bit ridiculous because we're nowhere near ETH 2.0 really existing. But such is the crypto market. So we have seen, as far as the impact of this announcement on Ethereum's on-chain metrics, we have seen a few sort of obvious correlations. So for example, if you look at exchange outflow for Ethereum, let's look at the last 3 months. Yeah, so you can see these massive drop-offs in the amount of Ethereum being hosted on centralized exchanges over the last couple of days, basically coinciding with the announcement of Ethereum 2.0 deposit contract going live. Essentially, people have indeed started to move their Ethereum from exchanges and move them into a staking contract. Now, obviously, the question in my mind, at least, is how, basically, if we see this continue over the next couple of weeks, right? If we see this outflow of Ethereum from exchanges into a staking contract, is that sort of reduction in available supply for Ethereum to trade really going to impact the price of Ethereum, or could it? I'm not convinced that it will. I have seen several reports, including the research report from Binance itself, saying that there is going to be a supply shock for Ethereum. So if you look at the amount of Ethereum currently existing on exchanges, let me show you. Yeah, so it's about 15.5 million already. So at best, if we say all of the remaining 500,000 Ethereum comes from exchanges, which is almost definitely not going to be the case, it's only going to drop it by an increment of Ethereum's total supply in exchanges. So if you look at Ethereum's supply in exchanges over time, we can already see that it's in quite sort of a decline, has been in the past couple of weeks, couple of months. This is, by the way, does not include Coinbase wallet. So this is something that you should keep in mind. We are working on adding Coinbase wallets to these calculations, but they are notoriously kind of shifted to track. So if we see, let's say, all 500,000 of Ethereum being staked from exchanges to the being, deposited from exchanges to a staking contract, it's really going to drop by like this much more. So, I don't think that you could call this a supply shock. Obviously, whether, that impacts the price just because people think that Ethereum 2.0 is coming, that's a different story. But as far as a market-wide or network-wide supply shock, I just don't think that's going to be the case. So as far as the sort of rise in Ethereum-related activity on the network, in line with the news, we can see that happening as well. So over the past couple of days, obviously coinciding with a rise in price action as well, we have seen the amount of addresses interacting with Ethereum almost revert back to these early July and early August levels. So I think the latest data point is 470,000 daily active addresses. So if you look at it, it's basically here, right? It's basically way at the peak of Ethereum's 2020 DAA action before we saw a massive decline due to the fees being exorbitantly high. So it's something that that we should keep in mind. The fact that Ethereum's active addresses are once again growing. I think its on-chain transaction volume has also seen a resurgence. Yes, it has over the past couple of days. So these can be relatively good signs for Ethereum. Obviously, what you do want to keep an eye on is how much of this activity is tied to a sell pressure. One way that you can kind of look into that is by looking at Ethereum's exchange inflow, or the amount of Ethereum being moved to exchanges. And once again, we are seeing an uptick in Ethereum's exchange inflow over the past couple of days, basically telling us that yes, although the news of ETH 2.0 deposit contract going live has kind of had a pretty positive effect on the price overall, some weak hands are looking to move their coins and to sell at this particular point in time. So it's not a huge amount of sell pressure, I would say, but it's definitely an uptick compared to what we have seen previously. So these are some of the metrics that you should keep an eye on for Ethereum in days to come. We can also just briefly look at the what the miners are doing and how they are reacting to the news. There has been a little bit of a dump in this. So this is basically the total amount of Ethereum being held by Ethereum mining pools over time. And you can see if I zoom out particularly, you can see that they do tend to coincide with the short-term or looming tops for Ethereum. So this is, a minor dump coinciding with Ethereum's top here, coinciding with the, consolidation period for Ethereum here, also coinciding with eventually Ethereum and the entire market breaking down here. So recently, or more recently, we have seen this once again, drop off in Ethereum's miners' balances, coinciding with Ethereum's local top. We have seen a slight drop off in the past couple of days, but nothing too crazy. So for now, miners are not really reacting to the news in any negative way. They're not capitulating, knowing that their demise might be near, because it's not near. It's going to be at least 2 more years, I think, until we don't need miners on the Ethereum network, and the validators are going to take over their role. So for now, they seem to be just chilling. This sort of drop off here, I think, is mostly related to Ethereum's pump above 440 rather than anything else. And finally, let's look at Ethereum social volume just to keep an eye on the amount of chatter relating to the coin. It's actually not that high today. It was higher here as Ethereum 2.0 contract got announced. Today, it's kind of in a decline. I think mostly because all eyes are on Bitcoin at the moment. But the fact that the crowd is not necessarily super excited about Ethereum's price action at the moment could be a good sign as well. So couple of things to keep in mind for Ethereum moving forward. And now I've seen a couple of questions already for Uniswap. So Max, I don't know. I know that your mic had some issues initially when you were talking, but maybe let's do a test and see if you're okay.
Test.
Okay,
test.
That sounds very good. Do you want to share a few of your thoughts on Uni? I know you're.
Yes, I will share thoughts, but Dino, I will not load charts. Maybe you can show charts.
Yeah, sure.
There is one thing which actually we can connect the dots with Bitcoin and share one of top 3 or maybe top 5 techniques for using sentiment. Yeah. There are not so well. We have a lot of indicators, but combine them together, I think they boil down to 5. So one of them, there is one very impactful metrics: coinage consumed. Sometimes Bitcoin calls days destroyed. But please, we always need to understand what is behind it, the reasoning why it's working. Yeah, because in every specific case, it might be different. At least what news are writing. So we saw a huge spike in Bitcoin coinage consumed too. Yeah, and it was because of Silk Road or whatever the story is behind. Yeah,
this one was Silk Road moving like $1 billion almost.
Yes, and didn't remember once I saw it, I said, "Oh, guys, we will see now a lot of volatility." And the reason behind it, regardless what the real story is, who moves the coins, what are the coins, it's always all coins which have big value now, because mostly they obtained Bitcoin like Silk Road. I mean, it was so cheap. Or in this case, in Uniswap, so huge spike, big amount of coins which are from from initial stage has done something, and it has 2 use cases. One of them, they're really panicking, so they try to save whatever is to be saved. So, and when you see this, you buy right away. Or the second case, it has nothing to do with panic, or not much to do with panic, but it can be just a very juicy story like the Silk Road. And juicy stories are discussed. And when it's discussed in community, people will do a lot of assumptions, like will Silk Road. If you remember, everyone will say, "Oh, now $1 billion will be dumped on a market; it will go down." And this is exactly, once you see everyone is, or many people are discussing the same story, and they have a kind of expectation, "Oh, now we should go down." Market never does what crowd expects. So keep in mind, and the stories are different, but on the data level, the metric is one: H consume, it spikes. And in the case of Uniswap, now I'm coming back to Uniswap after introduction. In case of Uniswap, it's a massive, it's the biggest on a record. Yeah. And then we read some stories that someone, I think was from Marvel, said, "Okay, guys, it's enough. I cannot suffer anymore. Let me get some back." And there was someone who gets this cheap, not cheap, free distribution in coins is dumped. This, in a case of Uniswap, this capitulation marks the bottoms. So now Uni is in a very bullish mode. When you see the capitulation, you change your bias. Yeah. So in a short, it's bullish now. Of course, well, and I can also make mistakes. But if you ask me one thing about Uni, check the network activity, what happens now the next few days. We saw the capitulation, so what happens now? The prices increase. Speculators are back to the game. The volumes are increasing. Now, if the network activity is oh yeah, you're sharing. Yeah. Yeah. By the way, yes, the network profit loss, actually, it's a big move, even with losses. Okay. So someone had it enough. Yeah. If we see comparable network activity like daily addresses or new addresses, which can say, it's okay, network feels healthy. Yeah, that's it. And we should go up. Because there is one fundamental metric which we are paying attention, and it was okay already for more than a week. It's trading volume or Uniswap. They stabilized and they stay around 200 millions a day. That sounds okay for us, yeah? Oh, yeah. I can share it.
Yep.
Yeah.
So this is related to the hack on Harvest Finance. So
Yeah.
ignore that one. But since then, yeah, we've kind of stabilized at around 200 million. We've been dropping to almost 135. So that's definitely a small but a significant bounce back. And it's gonna be very interesting to see what happens in the next couple of days, because a lot of DeFi coins are up. A lot of altcoins are rallying at the moment. It's going to be interesting to see how it impacts the Uniswap's volume and liquidity in the next couple of days, right?
Yeah. So capitulation is good. This is what you want to see, and we saw it. If you're looking for confirmation, just and it's good because price moved a lot. Price moved like 50% almost, around 50%. So it's kind of not the best strategy now jumping aboard. So you might look for correction, and then you see just simple stuff like directive addresses, new addresses, transaction volumes. If they're on a healthy level, ideally higher level than before this last bottom. Then enter whatever your risk reward proportions are. Okay, but I still my main topic is I'm watching Ethereum 500. It should be attacked. So a lot of things depends how this attack will proceed. We break or we reject it in a very severe mode. Many things depends on it. Okay, but that's it. Actually good you shared iFi, because they share quite some. And iFi, there is another story. Someone was short in 180 or 190 iFi, and community got together to punish him. That was a funny story.
It was. So basically,
I mean, for him, maybe not funny, but I mean, it's interesting to see these things happening.
Yeah. And still, it was also a large spike in edge consumers, basically meaning that, some dormant coins, a large amount of previously dormant iFi was moving here at the local bottom. This, I think, maybe even an all-time high. Well, I mean, all-time low. In either case, these sort of spikes in edge consumed, they're not bottom markers necessarily. They're not top markers necessarily, but you can see them kind of here coinciding with local bottom and here coinciding with the local bottom as well. Basically, just when you see these shifts in the behavior of long-term holders, it's usually a sign that the upcoming price volatility is possible and sometimes even likely. So that's what we've seen with a few of these DeFi darlings over the last couple of days, right? Okay. All right, so we're getting close to an hour mark. I want to do at least one more coin. I have promised to do Ren and Stake, so let's do Ren and see if we have time for more. I haven't been keeping an eye on Ren recently, so I'm interested. I'm not going to start with H consume. Let's start with just general on-chain activity to see how it's been performing recently. Okay, so this is the amount of daily active addresses for Ren, which has continued to or has kind of rebounded in the past couple of days. Let's zoom in a bit so you can see it. At the moment, we're at about 1,000 daily active addresses. This is obviously connected to the price rally. So we'll have to see whether it holds or it's just it happens like here it happened, and then we immediately see a declining crowd interest, and as a result, a declining price action as well. So that's one thing to keep an eye. Yes, there has been a spike in daily active addresses over the past 48 hours, but will it sustain itself is the next question. As far as the amount of activity on the network in terms of the amount of Ren being moved on chain, there has also been a spike today, a big spike actually, 22 million Ren being moved on chain. It looks like the biggest spike since early October here, since around the local bottom. So we have seen similar spikes in Ren's transaction volume, earmarking both local tops and local bottoms. Basically, this is just a strong move. A lot of people are at the moment, or just a couple of big whales, are moving their Ren. And if they're moving it, if you put the market action in context, or if you put this move in the context of the price action, it's not looking, it's looking great. It might be people looking to sell their coins and take some short-term profit as Ren approaches the 0.3, which I think has historically been a pretty, let me put this out, a pretty contentious level. So that's one other thing to keep in mind. Now, let's look at the actual amount of sell pressure for for REN. So I want to look at the exchange inflow or the amount of REN being moved to exchanges. And recently, or in the past couple of days, we have not seen an uptick. So at least from this point, we can say, okay, we're probably not seeing a whole lot of sell pressure being applied to REN at the moment. There has been a slight spike in daily active deposits over the last couple of days. So what this basically means is deposits are addresses that are used to funnel REN to exchanges. So when you send REN to an exchange, it doesn't directly go to an exchange wallet, but rather first it passes through a deposit address. So when you see a spike in deposit addresses, what that basically means is you are seeing a spike in the amount of users sending money or REN to exchanges, which does tend to coincide, as you see here and here, with local. So a little bit of a spike. This has actually probably been a capitulation. A little bit of a spike in the past couple of days, but nothing too crazy to worry about at the moment. Let's look at the amount of our social activity for it. No, not a whole lot of chatter at the moment. So it's still kind of flying under the radar for the time being. Let's look at a slightly higher interval. What you don't want to see is you don't want to see these sort of massive spikes in social volume coins and then immediately kind of declining, showing that it's basically just a whole lot of FOMO, not really a sustainable rise in the amount of interest towards a specific coin. So for now, we're not there yet. It doesn't seem like the crowd has picked up on the REN's price activity at the moment. I do also want to look at the average profit of specific groups of the REN holders. Let's look at the 30-day MVRV. I want to look at it as a line. There we go. And let's take a look at the last 6 months. So basically, at the moment, what we're looking at is the average profit or average loss of all of the addresses that have acquired the REN in the past 30 days. And I'm going to zoom out a little bit more to give you more context. So at the moment, we are minus 1. All right, so we're about almost at break-even point for short-term holders. So obviously, the people that have acquired REN in the past 30 days have had quite a rough time. October has not been kind for REN. So they have been underwater for quite a while, and then more recently, as this spike has occurred, they have gotten back to almost break even, minus 1% on their initial investment. So at these points or at these junctions, I would not expect a lot of REN holders to start selling, at least these short-term holders, just because they're still at about break even. Like, just put yourself in their shoes. If you were in their shoes, would you sell REN at minus 1%? Probably not, right? You would hope that it's going to pump a little bit higher to not just reclaim your initial investment, but also take some profits. Now, we can also check out what the long-term MVRV is to see what the average profit of all of the addresses that have acquired REN in the past 365 days currently is. And we are at 22, is it a little bit higher? 37%. Okay, let me zoom in and I'll zoom out then. Yeah, 37% at the moment. So that's plus 37% on your initial investment is not bad. However, if you look at historical trends, you can definitely see that long-term REN holders have been known to hold for quite a long time before selling. So this here was about 83%, 85%. I don't expect that we'll see this sort of rally again for people to wait until plus 230% if they're in profit before starting to sell. I could see this sort of move happening again. So long-term REN holders looking for about 100% of their initial investment before they start selling. So at the moment, the short-term MVRV is kind of underwater still, which is good. The long-term MVRV is positive, and it's quite positive, like plus 40% almost on their initial investment, but it could go higher just based on historical trends. So in general, I think REN, I mentioned it last time as well. I am fairly biased towards REN because I think it's a project with a lot of potential, and we can look at the amount of REN BTC existing on Ethereum and how that has progressed since, I think, May 27th. That was the date of REN's VM launchnet. So REN BTC on Ethereum. Okay, so yeah, this is the launch date, I think here, of Ren's virtual machine. And then since then, the amount of Ren BTC or tokenized Bitcoin through Ren's virtual machine has kind of, surged to almost 27.5 thousand Bitcoin or Ren BTC today. Now, there has been a sort of lull or just a plateauing in the past 2 weeks, which I think is connected to just the overall decline in DeFi-related projects and DeFi-related yields. But overall, I think we are still in a very Ren BTC is very well positioned for another sort of, if there's a breakout in DeFi projects and DeFi-related protocols again, I think Ren BTC is super well positioned to claim a market share for anyone that wants to use Bitcoin on Ethereum to gain some passive income. So it's something to always keep in mind when analyzing Ren is the performance of its underlying tokenized Bitcoin. All right, so I think that's going to be it for Ren. Do we have time for one more? I think we do, right?
Yeah, we can. I was also going to say I've got my models up now, and I could spend 3 to 5 minutes on them as well. But if there are questions, I don't want to short anyone if they're waiting.
Bitcoin dominance.
Okay.
People ask.
Good one.
Let's do Bitcoin dominance. And we can finish it on that point.
Because last time we discussed it was, I think, more than a month ago when they say there will be big move up. Even though I expected to go a bit deeper, I think 54. I saw that could be the ultimate bottom, but market never does what you want to every single move. But now, yeah, check. Oh wow, okay. That's an interesting, yeah. Kind of if you pull kind of resistant line on connecting tops of downtrend, yeah, we're kind of playing with it now, somewhere in this area. Yeah.
So it's the highest it's been since May here. I think this was this was the halvening hype as well. So this is May 12th was the halvening. So this was when Bitcoin's dominance started to drop off and the DeFi summer happened. This is what it looks like now. It seems like it's reclaimed most of its DeFi summer summer losses.
And did it very fast, yeah.
Very fast. Yeah, I mean, it's interesting. I've seen a lot of people on Twitter saying that, it's not just people moving into Bitcoin, but now even funds, some people are saying that even, institutionals and funds are moving into altcoins as well, Ethereum, DeFi projects and stuff like that. So it's going to be interesting to see what Bitcoin does next. Its dominance is quite high, like 65%. I think historically it's been relatively high, right? What was it during the all-time high here for Bitcoin? It was 70. It was 70%. Yeah. Okay. Yeah, before the drop off. Interesting.
Yeah, but by looking at this, it looks like we will see more of Bitcoin dominance growing.
You think it's going to grow more?
Yeah. Well, there will definitely be coming times of altcoin reclaiming the ground. Just because there are quite few really good altcoins. I don't even know if you're called Ethereum altcoins or not. And there are enough players there who can play a good game by pumping them. And but in general, you should keep quite something in Bitcoin. It looks good. It looks bullish. it goes up and it goes up on good volumes.
Okay. All right. Well, we'll see in a week whether you were right, Max. So Max thinks we might see a bit more Bitcoin dominance. In good volumes too today.
Even though I don't know what kind of volumes they calculate.
I don't know.
Bitcoin dominance by itself, it's not tradable.
Yeah, I don't know. What is the volume here?
They may just be using Bitcoin.
Maybe
something similar.
I guess. Okay.
But definitely we will see very strong drops of dominance along the way. It's typical in the initial phase of reclaiming the territory. In this sense, reclaiming Bitcoin dominance, there will be very heavy corrections done. And yeah, maybe.
Here's a question for the both of you. Do you believe if Bitcoin begins to drop, that altcoins will get the most pain and bleed further, even though they're already so far down compared to Bitcoin?
Good point. So if it goes down, will we have a strong correlation?
Right.
Yeah, I would say yes. I would say yes. At least as a
I would as well.
Yeah,
I would agree. And I'm
maybe
looking
later on, maybe not, but at the moment.
Yeah, especially with altcoins rally yesterday for the second half of the market close or the market day, we saw altcoins trickle up quite a bit, and I'm seeing that even on the short-term MVRVs now, most are looking either neutral or bearish now. Ren, like you just showed, Dino, that's close to the danger zone right now. Almost all of the MVRVs are either around zero or very bearish. Bitcoin, Chainlink especially, very bearish. Synthetics, 0x, these are all very bearish. The only one I see bullish out of the 20 or so on my model is Bancor. But for the most part, these are all looking pretty bearish right now. And that tells me that if Bitcoin falls, altcoins will fall, either in tandem or way more. So just keep that in mind.
Yeah, it could well happen. The only thing that I'm curious about is how Ethereum would react to that scenario, just because of the bullish news that have recently been released and announced. I don't know. For me, I think Ethereum might be headed for a good month regardless, but it's been very rare that it's able to kind of completely decouple from Bitcoin for long periods of time. So if Bitcoin does dump, it might be an altcoin bleed out as well.
Let me share my screen for one more minute, if you don't mind, Dino. I want to show Ethereum on the NVT as well. All right, so this is Ethereum's NVT. As we can see, when it turned green way back in May, that's when prices really started to take off. Obviously, we had one down month here, but for the most part, since it turned green, even all the way back in February, it's been mostly a big uptick other than the Black Thursday that was the big anomaly, right? So right now, token circulation continues to improve, right? The lower these bars are, guys, the better the NVT looks overall, because it's basically dividing the amount of unique tokens being moved by the market cap. For Bitcoin, it's also looking semi-bullish right now. And this is a good sign because price is going to be able to take off the most when there's that healthy amount of unique tokens transacting from wallet to wallet. So both are looking good in that respect. And I would argue that one of the main reasons that the price has been able to go up for Bitcoin as it refreshes here is because of the fact that token circulation has been looking so good for it, and Ethereum's looking great as well. So there is a chance that Bitcoin can sort of hover around the 14 to 16K area for a while, and Ethereum can kind of decouple a bit, but we'll have to look for good signs of that on Sandbase. And this is just the MVRV model that many of you have access to if you're a Sandbase Pro member. If you don't for some reason, ping us in the Discord channel and we'll let you know how to get it, along with that NVT model I just showed. So Bitcoin, you can see it's below this danger zone line. This basically resembles the bottom 10% historically for where MVRV stands. So because MVRV is so high for everyone, that's why these are all showing as bearish. And you can see here, Bancor is the only one bullish, as I mentioned. So I just wanted to show that, visualize it for everyone, and I think we can wrap it up here, Dino.
Thanks everyone for joining us. It's going to be, I think, another week of fireworks. So keep an eye on the charts and keep an eye on our insights, because we're going to have a couple of very detailed breakdowns of both Bitcoin and Ethereum and the general market coming in the next couple of days. For everybody that has enjoyed this type of content, please do click like on this video and subscribe to the channel if you haven't already. And as always, whoever leaves a comment at the end of the video below it is one of my favorite persons in the world. Now, if you would not like to wait for another week to kind of catch up on the most up-to-date and real-time analytics on Bitcoin and Ethereum and other coins, check out app.santiment.net. Everything that you've seen today being talked about as far as models, templates, metrics, insights, everything is available on Sandbase, app.santiment.net. If you don't have an account already, you can create an account to get a free 2-week trial for everything on the platform. There are a few free features overall, but most of the most valuable features are in fact paywalled. So check them out for 2 weeks. Make sure that you believe, as we do, that they are as powerful as we think they are. And if you agree, then it's only $49 for a monthly plan. However, if you type in TWIC or This Week in Crypto, shorthand for This Week in Crypto, in your checkout, during your checkout, you will also get 25% off your first billing cycle. So that's going to be it for us today, guys. Thank you so much for everybody sticking by to the end. If you want to talk to us more, join our Discord. The link is going to be in the description of this video. We talk about this stuff throughout the week in our trading channels as well.
One other thing, Dino. One other thing. I want to mention that we have referral link sharing now, guys. So if you're on app.santiment.net and you want to share it with your community, keep in mind that you can get 25 to 35% of any subscription signups by simply going to your account settings and generating a ref link. So if you have an active Sandbase account, whether it's free or pro, use that ref link, share it with people, and if they sign up, we'll be able to track it and you'll get a piece of their purchase for their first month. So keep that in mind.
I can actually show that real quick. So if you go to account settings,
yep,
you can click here, create referral link, and you will get a special link. I'm not going to do it now, but you will get a special link which you can then share. And anytime that somebody clicks on this link and becomes a paid user through it, you get a percentage of the profits. So yeah, that's something that we've introduced recently. Thanks for sharing that as well, Brian. Okay.
Yeah, sorry to cut you off there.
No
Thanks,
worries.
guys, so much.
Thank you, Brian. Thank you, Max. Thank you, everyone, joining us, and talk to you in 7 days.
Take care, everybody.
Bye, guys.